Hey everybody, and welcome to the PlantStock channel. Hope you guys are doing good. So it's me and Mayur here at basically 9 a.m. Eastern time in the US. It's about 3 p.m. here in Sweden, so a bit earlier than we normally do it. We're a bit busy later, so we thought we'll just do it now. And if you can't participate now, then obviously you can check it out later. So, just a quick disclaimer as always, this is not financial advice. Whatever we're talking about is just our personal opinions. Two buddies talking about things we find very interesting, Beyond Meat being one of them. So, and I thought just before we get into the business here, talking about this, about the Q4 reports for Beyond yesterday, considering what's happening in Russia or especially Ukraine being invaded by Russia, with our hearts and prayers goes out for all of those people, the innocents, no matter the issues we have right now with our private economy or our investments. These are obviously stressing and painful at times, but I would say probably nothing compared to what people in Ukraine are experiencing right now. So, and we did see some really weird reactions on the market yesterday when it closed, or a few hours maybe before it closed. That from basically when they invaded on Thursday and then kept doing it, obviously during the day. Yeah, everything crashed first, and then it actually ended up. I think the Nasdaq was like 3.3%. And Beyond Meat had like 3% up, and Oatly was like 7.5%. So, what do you think that is? That it just completely changed around that way?
It's hard to know exactly what triggered that. Maybe there was some reports that said that, Russia might be coming back to the negotiating table. I think that was one thing that was floated around.
Yeah,
Um, so I think the world is pretty united right now
yeah,
behind Ukraine.
yeah,
So that, that's, sometimes a good thing as well, where, you have one clear aggressor, and everyone is united against, behind the victim of that.
yeah,
So that helps build solidarity, and that could be one reason as well.
yeah,
And the other reason too is that stocks have just been extremely oversold heading into this
yeah,
event as well.
yeah,
So all of those factors could be there.
yeah. And it seemed though that a lot of there's some speculation that it could be also that the Fed, if it would be a prolonged war, the Fed might actually wait with the rate hikes or lower them anyways, considering that they don't want to risk a recession. So
Hmm.
obviously that could have a take, but it doesn't seem to really matter right now. I think the last I saw on Beyond, it's basically minus 10% in the pre-market. I can take another look now, but so yeah, so we had
And that's surprisingly, that's not that bad considering what we've seen from a lot of other companies,
yeah,
being down 20%, 25%.
yeah,
Like, I'll take this 10% drop here
yeah. We're
in
talking
Beyond Meat.
Facebook and Meta. Yeah, definitely, definitely.
Yeah.
So yeah, but I thought maybe we could begin first with talking about for people who are interested in really learning about what should you focus on an earnings report, because there's so much, right? And especially when there's a 10Q, obviously that should probably be another video in the future. But what would you focus on earnings report? What would be your main thing?
Yeah, the two main things, and this is kind of what you do for any company that doesn't turn a profit just yet, is focus on overall trends in demand, right? So which is the revenue side of things, and then profitability from the point of view of gross margins,
Yeah,
right? Because that's about all you can do with regards to early stage high growth companies.
yeah,
So it was a disappointment in both areas, at least to me.
yeah,
Now they actually met analyst expectations for Q4, it was, a very small miss. It's almost negligible.
Yeah.
So they basically hit the target for revenue. But what really surprised people was the really low gross margins, right? So we talked about that yesterday,
Yeah.
where they posted just 14% gross margins, which is the lowest quarterly gross margin they've basically ever reported since
Yeah.
being a public company.
Yeah.
So the big question is what happened right during that quarter? Why did that happen? And I'm willing to be patient, right, with investments. Companies that grow don't just grow evenly, just neatly every single quarter, where everything just falls into place every single quarter.
Right.
Growth can be lumpy as well, where you have big ups and downs, or flat periods before you have reacceleration again. That happens all the time. So I'm not as worried about that revenue growth, that $100 million that they posted for revenue for the quarter. What I was, just confused by was why the gross margin dropped so much.
Yeah.
So at least the one good thing that came out of the call was pretty good clarity as to why that happened. So Ethan Brown, mentioned that 2021 was characterized by choosing to invest rather than optimizing, profitability for that current year.
Yeah.
And 2022 is going to be the year of execution, is what he called it.
Yeah.
Um, so a number of things happened during the quarter where, again, kind of what we talked about yesterday, my suspicions kind of came true, which is that they had a significant amount of depreciation that they recognized in Q4 with regards to their facilities in Shanghai and in Europe.
Yeah.
And so that caused their, cost of goods sold to be overstated, right? To be higher than normal, because those factories haven't yet started producing, revenue as much.
Right.
So this is all related to inefficiencies when it comes to ramping products in their early stage.
Yeah.
So that's understandable, right? And that isn't usually something that persists for a very long time,
No.
as long as they scale production and start to sell, more and more.
Yeah.
So we need to see retail trends, reverse back into positive territory.
Yeah. Yeah, so basically, I think what you talked about, I think before the call, that we can see that they're actually doing better in food service now. And hopefully that will eventually reflect with all their partnerships that people start buying like a Mac plant and or a KFC chicken, and they see the branding, and then they're like, okay, when I go to a store, I'm going to look for that brand, or they'll see the brand a little here and there, and they'll be interested in buying it. So basically, that's free commercial. That's like we're talking about branding ambassadors, players, and football players and basketball players, but I think these restaurants will probably do a way better job when people are trying their products and happy with them.
Yeah, and the other thing that Ethan Brown also mentioned with regards to why margins were so bad, which I thought was interesting. So they actually decided to outsource
Yeah.
a significant portion of production. So they used co-manufacturers to do this, rather than doing everything in-house.
Yeah.
During these quarters here. And that was in order to free up some line time for commercialization. So they didn't mention exactly what they're commercializing.
Right.
I think it has to do something with the new chicken product, right? The Beyond Chicken tenders
Yeah.
is one of them, and then also the chicken that's used for KFC.
Yeah.
Which we've seen a couple of articles on this where the chicken that they make for KFC is different, very different from the chicken that's available at retail locations.
Yeah, the tenders.
Yeah, it's a much more complex manufacturing process.
Yeah.
And it leads to a much better product, right? It mimics the texture of chicken much more closely.
Yeah.
So I think it would be a bigger commercial success, at least because it's so much better in terms of mimicking the texture of chicken. But that comes at a cost, which is that it's more costly to manufacture.
Yeah.
At least right now. So they chose to do that, right? So that way they can launch this product for KFC. I'm guessing they didn't mention it specifically, but I'm guessing it has to do with that.
Yeah.
So I guess because of this, they accepted lower gross margins in order for them to be able to commercialize these products quicker, rather than having to wait a longer time before they can launch.
Yeah, I wanted to ask you about that since you are like me, but probably in more detail. You're a Tesla nut as well. And I'm thinking like 3, 4 years ago in Tesla's journey, when it comes to their margins, what were they looking at? Because they were also like, focusing on investing and R&D, right? So
Yeah.
what did their margins look like?
Yeah, there was a couple of quarters where margins fell to like into the teens,
Okay.
somewhere between 17, 18%. That was when they were facing real liquidity concerns too.
Yeah.
So that was basically during the time of the Model 3 ramp. It was a complete cluster, like in terms of getting that product scaled in the beginning.
Yeah.
So, Elon Musk basically said, look, who cares about margins right now? We just need to get the product into customer hands.
Yeah.
So that's priority number one,
Yeah.
right? Because if you miss that chance, people cancel their orders and just move on, and it's very hard to get them back
Yeah.
after that.
Definitely. Definitely.
So, so Elon Musk did what he had to do, which is that forget about margins, forget about profitability for now. Let's just get these cars built and delivered to the customer, and we can worry about profits later on. Right now, the goal is to get the product into customer hands, get good reviews out there, get YouTubers out talking about it, get excitement building amongst the customer base.
Yeah.
That'll end up selling itself in the future once we figure out these production issues.
Yeah.
So I think that's kind of what's happening right now with Beyond Meat. They're doing what they have to do in order to work through these production challenges and simply just focus on making the best product,
Yeah.
rather than worrying too much about margins and profits right now.
But it does seem that even though I know sometimes it's dangerous, of course, to compare such huge different companies. I mean, they're different in many ways, but the commonality is that they're trying to fight climate change and sustainability, right? So making the planet better and being disruptive. And but I would say it's quite interesting that even though there seems to be reports here and there that I'm not sure, did Ethan mention this, talk about that we can see that plant-based food seems to be selling a bit lower. People don't seem as interested. And even if that would be true, it was quite clear, according to their own studies anyways, and the data they look at, that it's still the number one brand in its category.
Yeah,
And I
yeah, he
think
definitely mentioned that.
so that probably tells us a lot that no matter what's going on here, they're still number one. They're still moving in the right direction. And again, like we talked about, 2022 being the year of execution, right? It's about time, considering what's been going on. So,
Yeah.
and what's the possibilities? Do you see them really like executing in a larger scale now?
I want to believe yes.
Mm.
I want to believe that,
Yeah,
but so they left us with another, kind of a downbeat note, which is that these low margins are going to persist into Q1.
yeah,
So they guided for very low margins again
yeah,
in Q1, um, before it starts to normalize in the back half of 2022.
yeah,
So, it's good that they guided for, 20 to 30% growth this year in revenue.
mm,
Um, but I think that it might be flat on at the gross profit line.
yeah,
Um, so all of that revenue growth won't really translate, I think, into gross profit as much
no,
compared to previous years. So at the gross profit line, I think we might end up being flat for the year,
yeah,
maybe even slightly down by maybe 2 or 3%.
yeah,
So again, like I think companies should always focus on just simply making the best products, and maximizing customer, satisfaction and therefore customer retention.
Yeah.
But, at some point you have to answer to the capital markets as well.
Yeah.
Because, they're down to $770 million in cash.
Yeah.
And, at this point, it's going to start to, beg some questions as to how they plan on funding themselves,
Yeah, this is
going
not free
forward.
cash
Because
either, because this is basically what's it, a dilution or a loan?
it's debt driven cash. Yeah. So they
Right.
do have, 1.1 billion in debt. I
Yeah.
mean, that's not coming due for quite a while. I believe that's like out to 2024, before that comes due. But still, like, they're down to
Yeah.
$773 million, I
Yeah.
believe.
Yeah.
And, let's say if they, and they're guiding for flat, OPEX this year, right? Ethan Brown mentioned this a couple of times,
Yeah.
where they don't think that, their operating expenses will increase much at all this year versus 2021,
Yeah.
which is good to see. Um, but if they don't get gross margins back up, then gross profit won't, go up significantly from 2021.
Right.
And so in that case, their cash burn won't really improve all that much in 2022.
Right.
I could be wrong on that, but it seems like, with another really low gross margin quarter in Q1, I mean, unless if they can make up for that and get, very high gross margins in the second half of the year, um, I don't see cash burn improving, the situation improving this year.
Yeah.
So I just ran a few numbers. Like if they were to, for example, if they hit, 600 million in revenue this year,
Yeah.
right, which is near the midpoint of their guidance, right, between 560 to 620.
Yeah.
Let's say they get to 600, and let's say they get their gross margins back to 20% for the full year, which is still lower, than, prior year gross margins.
Yeah.
But I'm only doing that because they're guiding for yet another low margin quarter in Q1, so that kind of kills yet another quarter of time.
Yeah.
To get to 20% margins for the full year, that's $120 million of gross profit, and their total OPEX for 2021, was 200 and what was it, $290 million, I
Yeah.
believe. So that's another year of operating losses of somewhere in that ballpark of $180 million or so.
But this thing that the CFO talked about, and Ethan as well, that less spending, less on, there should be better margins, and the operations should be better, more efficient. SG&A should also be more efficient. And like you said, they actually said that it should be less apex. But
That's what, yeah. So they said that, right? But they also said that, basically their guidance for almost essentially their guidance for their total operating expenses, which includes SG&A,
Mm.
would be basically flat year over year.
Mm.
I think Ethan Brown mentioned it will not significantly increase. So their total OPEX for 2021 was $292 million.
Right.
So I guess we can round up and say 300 million.
Yeah.
If they get to 600 million in revenue and do 20% gross margins, that's $120 million of gross profit versus, 300 million in operating expenses. So again, that's another loss, of about $180 million for
Yeah.
the, at the operating income level.
Exactly. Exactly.
So, this is, it's not bad, right? It's not terrible. They've got $733 million in cash. So I don't see this becoming a liquidity concern just yet. But they do need to start showing, that this trend is reversing, because otherwise they will have another big cash burn year. I
Yeah.
don't think it'll be as big as 2021, was, because I think capex won't be as big this year as it was in 2021.
Yeah.
But I'm just mentioning this as a thing that I think investors are going to start to ask about, or wonder. And when this question starts to come up about liquidity, um,
And dilution
that's
fears.
tough to that's dilution fears,
Right.
right? Exactly.
Yeah. But
So
that,
I'm not trying to scare anyone. I don't. Let me just caveat here. I don't think this is getting concerning yet, but it's something to watch out for.
yeah.
Because there's always that concern of how much cash do they have, and what is their cash burn rate.
Right.
And they burned a significant amount of cash in 2021. So that was in the tune of 436 million dollars.
And basically they also
You know.
talked about that one of the biggest reasons why they're doing that is their huge partnerships, right? Like
Mhm.
with McDonald's, the Yum brands, which is KFC, Taco Bell, and Pizza Hut, right? And then we have now the PepsiCo deal, and basically being the perspective that they needed to do that so they'll be able to start making money now and getting everything to start flowing, basically putting out the
Mhm.
chess pieces, and then we'll see actually things actually fly up there. But and that's really positive, and but obviously we need more proof of that. We need to see that in the numbers in the next couple of quarters, preferably obviously in the Q1. But yeah, but what I found weird was that there are two things that we didn't hear that much about China and the potential there. Because I would, think that considering that they have now two facilities in China and the R&D um, facility there, that this could be a really huge opportunity, and you would want to hear more about that. I don't know if there's some like rules with the Chinese government that they need to. There's a hush hush. Seems to be a lot of that in the companies these days, and that's one issue I think. And the price parity thing is something that annoys me because again, like I told everyone yesterday, it could be me that I'm missing a quarter or two, but I have a memory about that it was like a year ago in February that Ethan said that in 2.5 years from now we will basically have price parity on one of our products, right? And that's amazing, and that's what we need, right, for really being able to scale. People want to buy a product that's cheaper but healthier for you, right? Not a premium product in the long run, especially in these categories.
Yeah.
Yet, yesterday he stated that several times. Yes, we'll reach price parity in 2.5 years, and I'm like, what? Or like, shouldn't it be 1.5 now then? So
Yeah. Well, remember, so in an earlier conference call, in I believe it was the Q2 conference call in 2021, um, he did mention that they are on track to achieve price parity for beef by 2024.
okay,
So I remember him giving that guidance in terms of price parity with
yeah,
beef.
yeah,
So I think he's going back to that guidance that he was giving. So
yeah,
maybe the earlier guidance from 2.5 years ago was a little too aggressive, but
yeah,
he kind of recalibrated that.
yeah.
Last year during Q2, I believe it was. I can go back and check,
Oh, it
but I
wouldn't be the
believe he mentioned
first.
specifically 2024.
He wouldn't be the first CEO of a disruptive company that overpromises. If we think about Elon
Right.
Musk.
Yeah. Yeah. Exactly.
Yeah,
um, but yeah, so that's the other thing. And then, I felt like the CFO kind of ended his portion of the call on just a very, dismal note.
yeah,
Like his ending was, we're reducing hiring, we're ending our consulting agreements, we're holding our teams flat. uh, so, that was I guess he's just a no BS type of guy,
yeah.
and he's just laying it out there, which I appreciate. I like that.
I mean, he's quite
I
new. He's
like
only
that.
been there half a year or something like that.
Yeah.
Yeah.
Yeah. Yeah. Exactly. um,
So
so, that's, again, I think they're starting to, take that seriously, where, they want to bring cash burn under control. And it does look like I do believe them on that side of things, where if total OpEx is held steady year over year,
Yeah,
and if capex comes down, which I think it should, because they're basically now optimized for their medium term growth,
yeah,
is what they said. So they've made the investments needed for medium term growth. So I'm guessing by medium term they mean over the next 1 to 2 years.
yeah,
So their current facilities and staff are sufficient to meet demand for the next 2 years or so.
yeah,
I'm just guessing that number. They didn't put out 2 years. That's my own estimate.
yeah,
So it looks like if we can see continued growth in revenue, in demand, at least especially on the retail side, then I think we could see some fixed cost absorption, which means better margins
yeah,
coming out. Um, so a big part of this guidance that they gave of 560 to 620, a huge sort of caveat to that, or component to that, which we don't know, is what portion of that is coming from retail sales,
yeah, exactly.
because that's where margins are. I mean, it's great to see McDonald's and Panda and all these restaurants pick up Beyond Meat products,
Yeah,
but ultimately we need to see retail sales pick up
yeah, exactly.
in order for Beyond Meat to generate margins.
Definitely.
And by the way, this brings another weird question I had, which is that they also guided for flat Q1 2022 revenue.
Yeah,
So
basically.
for not just for margins, but also for on the revenue side,
Yeah,
it's going to be, I'm guessing, right around 100 million again.
yeah,
So that begs the question of, how could that be? Because we've already started to see Panda and McDonald's, um, ramp up, their offering
yeah. McDonald's
in Q1.
was the 14th of February, so that would be half of the Q1, right? And that's 600 new locations. And then we have, but the UK, which is 1,350, and apparently 1,500 with Ireland, 1,500 new
Yeah,
locations there. That started in the beginning of January, right? And KFC, 4,000 locations. That was also quite early in January. That
yeah. So
doesn't make
most of the
sense.
quarter should be there.
That doesn't make sense, does it?
Yeah, it doesn't. So I'm guessing maybe their agreements with them is to be paid, at a later date. Um,
Mm.
that could be one of them.
Mm.
Like, because I mean, McDonald's is McDonald's. They're the world's largest restaurant.
Yeah,
They get their way with whatever they want,
yeah,
especially if you're dealing with a small supplier. Beyond Meat at this point is a tiny supplier to
yeah,
them.
obviously.
So they can make the terms according to what they want. So maybe that's how it works, where they pay them afterwards,
Yeah,
And remember, this is the position Tesla's in now,
yeah,
where Tesla is such a massive, you know, uh, you know, demand driver for suppliers,
yeah,
that they can constantly pay suppliers at a later date versus when their own customers pay them.
yeah,
So that's what we call negative working capital, right, in finance world,
yeah,
which means that constantly becomes a source of cash, because you get paid from your customers faster than when you have to pay your suppliers.
okay,
And when that constantly happens every single quarter, that's that's constantly a cash balance that is made available to you at a very low cost. It's
right,
almost like having a loan, an interest-free loan from a bank,
right.
because you're always paying your suppliers later than when your own customers pay you.
Yeah. So,
So maybe that's how it is with McDonald's, where they're like, we'll pay you whatever our revenue was for the quarter, we'll pay you the next quarter.
but it is an interesting
That
thing
could be it.
here. Yeah, Gail here says that they said the growth would be flat, not revenue exactly the flat. Like Q1 would be around 120 to 130 million, 20% growth as compared to Q1 21. I don't remember that, but I'm gonna have to listen to the call again. But
Oh, is that okay?
yeah,
Maybe I. Yeah, so if the growth will be flat for Q1, wouldn't that mean that revenue
Yeah,
would be
that's
essentially flat?
yeah. I wonder that too. So yeah, we'll have to go look at that again then.
Hmm.
Definitely, and we'll definitely talk about this again anyhow. So, but one thing that people do say and it's talked about yesterday, and I haven't thought about that, is the McPlant. That to some extent, if we are talking price parity, right? And I've heard that too, that the McPlant, anyways, in the UK, and I think in the US, it's still quite inexpensive. The McPlant, considering it's basically the same burger. It might be smaller than what you buy in the stores in the retails, but it's not like it's very much more expensive. And in the UK, I think it's basically the same. So to some extent,
Yeah,
it
I
would be
believe it's the
price
same
parity.
price in
Yeah,
the UK.
yeah.
Yeah,
And then we have someone mentioned here, Rebecca, that in that the deal they have now with A&W in Canada, that's like another 1,000 locations, but I think it's only going to be for another month or so. But it's still, that's, you don't know, it's temporary, could be permanent, right? Like many of these deals. That's
yeah.
basically price parity there too.
Okay,
So I,
yeah,
I
that
actually,
that would make sense.
yeah. So to some extent, that would be positive. The problem, obviously, is like you talked about several times, Mayur, is the margins there. That we have no idea what kind of margins, and it's probably going to be on the low end for Beyond's part right now. Still good though,
Yeah,
and if it gets people to buy more, and we have, on a positive note, heard that when it comes to the McDonald's deal, when it was only in these 8 locations, they sold about 70 McPlants per day at an average in those 8 locations, 70. And normally they sell about, I think, 100 quarter pounders. Oh, which is the equivalent in McDonald's. I'm not sure if it's the quarter pounder or if it's, yeah, I don't eat meat,
yeah,
so
the Big Mac or the
Big Mac.
quarter. Yeah, I think it's something.
Yeah,
Yeah, the Big Mac I think is the main one.
yeah. So if it's around 100 they sell normally,
Mhm.
um, and they actually sell 70 of a plant-based version. I think that's really good news, actually, because they're barely begun their journey in McDonald's. And
Yeah,
I actually heard a lot of the UK folks that come and comment in the Discord. By the way, guys, if you want to talk to Mayur or me, come to the free Discord channel. Take a look in the description. But they've stated that on several places in the UK, they seem to sell about 100 per day. So I don't know if that's
hmm,
reflective of all of the UK. And we know that the UK, when it comes to vegan food and plant-based food, is much more popular in the US. So certainly, even though the margins will be lower, that's still a good sign.
yeah,
Yeah,
yeah. And see, that's the thing about the U.S. is that I just feel like even now, at least in the U.S., Beyond Meat products are just not available enough.
yeah,
Especially the burger itself.
yeah.
I keep seeing the sausage, the Beyond Meat sausage patty, which used to be at Dunkin', which I really hope they can get that relationship back because Dunkin' was that's a huge chain, right?
Yeah.
Almost the size of, I wonder if they're almost the size of McDonald's in terms of locations.
I'll look it up.
But yeah, Dunkin' was a huge, partnership that for some reason fell through, and I don't understand why. But I hope they can rework that and come back to that. The other
11,000
the other
11,300 worldwide and 8,500 in 41 states in the US. So,
Okay.
but still many.
So yeah, close.
Hmm,
Yeah, a lot, but
hmm,
not as much as McDonald's. But yeah, still lots of Dunkins everywhere.
yeah,
Um, and so I hope that comes back. Maybe they're working on something better. Who knows?
yeah,
So I hope that relationship does come back. And the other thing that's still in the works is that deal with Taco Bell.
yeah.
So that other, initially whatever they were working on fell apart, and there was all these media reports that that it's a done deal, that they're not talking anymore. But I think they are talking. There was some clarification on that. They are still
Oh yeah.
working on it.
They said they just
Um,
had to start to work on a new recipe. That doesn't mean that it's not going to be a product or a collaboration. I mean,
Yeah.
and Taco Bell CEO actually, or Yum Brand CEO actually went out and said that clearly, and they wouldn't have done that if they're not planning to continue the collaboration. So,
Right.
guys, I just want to point out the fact that both me and Mayur, and we talked about this before we started this today, that we, we might feel a little down now, and kind of not we might seem like we have a bearish sentiment, and I think maybe to some extent we do. And it would be weird considering everything, that I think we both love this company, and long term, certainly I really believe in the company, but it doesn't mean that we don't need to look at these nuanced perspectives, right? And these sentiments and what's going on, the numbers that actually doesn't look too good right now. We really want to keep it real, guys. So not just hyping and being, oh, everything's going great, So it's important to have both sides here. So you have two people here, me and Mayur, that really love the company, right? We love the vision, but we still want to keep it real, both for you guys, but for us as investors as well. So but I also wanted to mention that two things that were interesting that he also mentioned on the call, Ethan, is I think he's talked about something that he was snacking on something as he was doing the call, and I think a lot of subscribers kind of speculated that it was because he was talking about in a few weeks from now. So in a few weeks from now, we're going to see the first product line, right? Or product, anyways.
Yeah.
And I guess I had that like over a month ago that probably is going to be some kind of vegan plant-based jerky with PepsiCo. Yeah. And people also talk about that could be some form of price parity too when it comes to those kinds of products. And then he just said regularly that they will have several new products now this year. So that is because there's a lot of people who complain about. People tend to look at innovation differently from me. That as long as you spew out a lot of products, you're very innovative. I don't agree with that. I think it's better to make as better products as possible. And I think they have quite a lot already, depending on what you compare with. But if they come up with a few more, that could certainly appetize some investors and analysts out there. And by the way, I'm sure you guys know, I was going to say that yesterday, expect a lot of new downgrades from different analysts, and it's already started.
It already started, yeah.
Yeah, like 4
I
or 5
believe
today.
Gary Black. If you look up Gary Black on Twitter, he's been a Beyond Meat bear for some time.
Yeah.
And he's been right. But anyway, he tweeted out this morning's downgrades. So everyone is slashing their price targets to somewhere between $32 to $45 a share.
Yeah.
So there's that, which is completely expected. I'm personally, in fact, if you look at the price targets, the lowest one is $32, which is funny because my own price target
JPM.
is 30.
Yeah. I thought about you too there. Yeah, it says here, Gary Black, that rev and EPS being slashed again. Comes to PT cuts. Yeah, JPM to 32, Cohen 42, I'm not sure how to pronounce that, Misoho 45, Piper Sandler 50, Goldman 40, and Bernstein to 47. Yeah, to be expected for sure.
Yeah. Which is not bad. I thought that, the price targets would be much worse.
Yeah.
But it looks like they're holding up, which is good, at least for now.
Yeah.
But, I think, again, the big question for 2022 is going to be margins.
Yeah.
The growth is decent, 20 to 30%, which is good. We want to see that. But, at what margin is going to be the question.
Exactly.
All these partnerships are super exciting, and that's going to help build the brand. It's going to help build brand awareness. So I think it will pay dividends later on, into the future, because then more people will know the brand itself, and therefore will recognize it in stores when they see it.
Exactly.
So, food service feeds retail. That's how it, normally works.
Yeah.
So it's great to see that. But I just, I wish that, we get more, QSRs in the US, because right now it's just not enough. I'm just like, just anecdotally for me, because I don't live in California. California is much more, vegan, vegetarian friendly. I live in Maryland, which is the eastern part of the U.S., and that's not exactly the most vegan place in the world. I mean, there are vegan restaurants, no doubt, but there's, it's not as popular here.
No, no.
And so where I live, I can't find any place that serves the Beyond Burger. I have
Whoa.
to drive, maybe 45 minutes to get to the closest restaurant that has it. And it's not a big restaurant; it's a single location restaurant.
Yeah.
So like a mom and pop shop,
Yeah.
local restaurant.
All right.
So I really want to see Beyond Meat start to get the burger
Yeah.
into more QSRs, and then like I said, I hope if anyone from Beyond Meat is watching this, I really hope we can work on striking deals with the countless Asian restaurants that are like family owned restaurants,
Yeah.
because even though there's just one or two, I'm pretty sure a lot of them rely on just a small handful of suppliers,
Yeah.
right? Because all of these, Chinese and Thai restaurants, they all seem to have a very similar menu. I don't know if that's how it is out in Sweden, but out
Yeah.
here, if you visit a very small, like family-owned Chinese restaurant, they all have basically the same
Yeah.
menu. They have, the same, dishes, everything.
It's
So
what
I'm
should
guessing that they
work here in
all
the West.
use, yeah. So I'm guessing they all use one or two, or maybe at most five distributors.
Yeah.
So if Beyond Meat can just get into one of those distributors, then they have access to thousands of, small family-owned, Asian restaurants,
And it goes for
and
the
that would be
whole.
the perfect place.
Yeah, I think it
Mhm.
goes for the whole world outside of China and Asian countries because it's really huge. All kinds of Asian cuisines, right? Especially Thai food and Chinese food, and not the problem for me because I love tofu, right? I've been eating tofu for 25 years. I love it in
Yeah,
all its different forms, and usually you can always get tofu at these
yeah,
places. But let's be honest, if I mean. Beyond isn't targeting tofu eating people. It's targeting meat
right.
loving people, which is great because that's what's going to make a difference. And considering they're already making these specialized Beyond products in China now, right? Like Beyond Pork and I think some other products right now too. They should definitely be able to use those here in the West, which could be an extreme time possibility there.
Yeah, yeah, exactly. And if you can get into that, that's like getting into another Dunkin'. I'm guessing there's as many, hole in the wall, Asian restaurants as there are Dunkins,
Yeah,
at least in the U.S.
yeah.
So,
Oh,
and that's just another great way to get into, just many, many more locations.
yeah, and little
So people are
Sweden.
exposed to their main products too.
Yeah, Sweden, we have really small cities here. We're only 10 million people here. And the third largest cities where I'm from and born and raised and lived for 40 years is about 330,000 people only. And yet, I think we probably have like 70 or 80 restaurants that are like either Thai or Chinese. So,
Yeah,
and that goes for the whole of Sweden. And I've seen that when traveling in Europe. You can always find Asian restaurants for sure. So
yeah,
yeah, I like that idea. I haven't thought about that so much, but it's good.
yeah.
So, all right. So,
So the last thing I just wanted to end with was that, I think, the revenue growth is very, promising. So, from a valuation standpoint, I think we're going to roughly a price to sales multiple of 3. So if we can get to say that, midpoint, which is $600 million in revenue this year, I think that means that Beyond Meat is going to roughly a 1.8 billion, market cap. So if you use, the share count, the most recent share count, that comes down to about $28 a share. So the share count as of Q4 is 63.35 million shares. So 1.8 billion divided by that many shares gives you, a target price of somewhere in that, $25 to $30 range.
So
So that's what I'm
PS
expecting we're going
PS
to get
of
to.
three then. P
Of 3,
yeah,
yeah.
that would be very
Price to
attractive.
sales ratio of 3,
Mm.
yeah.
So like you said,
Would
that's
be attractive. That would be attractive only if you believe in the long-term, story, because right now the numbers are not pretty, right? The margins are very bad right now. There are ramp inefficiencies. They're guiding for, potentially more, ramp inefficiencies. So you're basically betting on a, acceleration of growth and an acceleration of margins.
yeah,
So it's a bet on, whether or not Beyond Meat is going to be, successful in the long run.
yeah,
And if you do think that, then yes, now would be the time to be getting it in when it gets to this range. I think it's going to roughly $30 a share.
yeah,
Um, that would be the time to get it, because right now sentiment is max bearish
yeah.
right now.
And I would say also the that to conclude here a little again with a comparison with Tesla, because normally many say that Beyond is the Tesla in the plant-based space, and that I think it was back in 2012 or 13 that Elon was talking about FSD and things like that, and we could have reached that in 2017 or 18. And then we have realized that it's going to take a couple more years. And I think maybe it's the same thing with Beyond Meat, right? That's going to maybe
Mm-hmm.
take a couple of more years, take longer to like rule the world than we thought. And that isn't necessarily a bad thing for investors who haven't started buying in or haven't bought in enough, basically. It might be a bad
Yeah.
thing if you're 65 or 70 and went
Mm-hmm.
in like me and you around 135 and 140. So, guys, you should know
Yeah.
that we went in high as well. If you are bleeding here with Beyond Meat or any other company, trust me, a lot of us are doing that as well. So the trick is not to panic, guys,
Yeah.
and control that stomach. The stomach and stress is more important than intelligence in many ways. So, all
Yeah.
right.
Absolutely. Well, happy birthday, Jesse.
Thanks a lot. Thanks a lot. So, and happy birthday
uh,
to your wife as well. My understanding is.
yes,
Yeah,
exactly. Yeah, same exact birthday. So
nice.
funny.
Huh, awesome. All right,
All right,
guys.
guys. Well, that's all I had here.
Yeah, and I think next Friday, since I think the week after on the Wednesday we have the Oatly conference call and earnings, right? So I'm thinking that next Friday, me and Mayur are going to talk about Oatly and what to expect there, what kind of expectations we have, and then we'll see how we do. We'll probably do. I think we won't be able to do the conference call because it's actually uh, early days for you guys in the US. Is like I think it's going to be 8:30 a.m. and I'm still going to be at work, so probably won't cover the conference call there. We'll see, but we'll definitely do a video either later that day or on the Thursday or Friday, depending on the situation. So me and Mayur will talk about that. All right, guys.
Perfect. Great.
Thanks for today.
Looking forward to it.
Have a great weekend, guys. Thanks, Mayur.
See you guys.
Bye.
Bye.